And good morning and welcome to VSA Capital 5 Minute Morning Miner on Monday, 24th of October. It's a bit of a, actually, at least it stopped raining. It was horrendous last night. But this month does seem to be dragging on. How are you this morning, Paul?
I'm well, and yes, we had some pretty good rain here for sure. That's right.
Now, it's LME week this week, and I guess the talk of LME week is going to be very much around what happened over the weekend in China. With the very public humiliation of Hu Jintao when he was basically asked to leave the 20th Chinese Communist Party conference, which sent out, I think, a very clear message of where China is going forward. And of course, that means that there is going to be massive demand in the West now to try and secure its own critical and battery metal resources. It has to, otherwise it is in real trouble. So actually, that in many ways was very good news, particularly those who have a slightly longer term perspective in terms of investing into the mining industry, because there is going to be huge demand in the West to suddenly get their own resources. That's particularly good news, of course, for Cornwall, whereas everybody knows VSA Capital is very active. Anyway, that's the way I'm starting the week off. What about you, Paul?
Well, yes, that was a significant development there in China, and as you say, we really do need, as far as Western democracies are concerned, to really ramp up the funding and spend in order to get a lot more battery materials, in particular, as well as magnet materials, into Western supply chains in order to develop our own manufacturing and development system outside of communist countries. So that has to happen for sure. In news out today, lots of news out for London listed firms. First of all, there was an operations update from the gold developer in Canada and dual listed Pure Gold. Awful lot of London investors there now biting their fingernails, I think, because the company has declared that they have stopped mining at Pure Gold because they're running out of cash, and they still haven't reached stable production there at their mine. So the warrants that they had been hoping would be exercised to give them some more money in November are out of the money, and it looks like they will not come into the money by the expiration date. So definitely on shaky ground here at Pure Gold.
Yeah, running out of money is not a good idea. Okay, we also had full year results from Rainbow Rare Earths.
We did, and those results, a lot of it is just announcements of news on the progress they're making on the Phalaborwa rare earths from gypsum project down in South Africa. A reiteration of the base case scenario around the PEA they completed in the year here on a NPV of 627 million and an IRR of 40%. On a 2-year payback period. Now, these are gypsum tailings from prior phosphate production, and they would be essentially reworked in order, because the rare earths in the processing to produce phosphate become artificially enriched in those tailings, and that's what they plan to rework in order to make returns here. And looking like with current rare earth prices, they would have an IRR post-tax of 51%. So definitely something they need to pursue.
Very good. Do you want to talk about Sylvania Platinum?
Sylvania Platinum, the AIM-quoted South Africa PGMs reclaimer, had optimization studies released here on their North Limb future developments for producing from raw ore on the North Limb of the complex, Bushveld complex in South Africa. Volsperet North ore body with about 15 million tons. Grading combined at 2.27 grams per ton in PGMs. And Scoping study was completed here with an IRR pre-tax of 18%, which isn't particularly that high given today's prices in my view, but payback period about 4.25 years. And it is high enough that they can go ahead and continue pre-feasibility studies, which they expect to complete in 2023. And we'll see just how much further improvement they might be able to make through the PFS period to see if they can make a decent commercial development of this.
Yeah, we also had some production news out at Griffin Mining, which is, of course, the AIM-listed Chinese miner. It did have to stop mining. I think they used explosives as an excuse because it's not that far away from Beijing. No one's going to allow anybody to be using explosives anywhere near Beijing during the Chinese Communist Party conference. So they're back into production, aren't they, Paul?
Yes, that's right. They expect to get operations moving as of about November the 1st, just as soon as they can get new deliveries of mine explosives to the mine site established. They also reported their Q3 production results, which do reflect that curtailment of some of this production here. About 30% lower tons were produced, and that's down both quarter on quarter and year on year. And the commodity prices for gold, silver, and zinc all down during the period as well. So it's making the best of a less than optimum situation, I think, is what Griffin is the statement.
It's a very tough one at the moment, I'd say. Okay, anything else you want to talk about, Paul?
Yeah, the really good news, however, that's out for M-quoted Alien Metals for their Hancock direct shipping ore operation, West Australia. Anglo American buying in with a $15 million commitment for funding in order to push development of these at-surface ores to production. They're high grade, they're easy to mine, and they're in West Australia, which is a top tier 1 jurisdiction. And they do intend to be in first production next year.
Yeah, I think we're going to see more of this. The big groups buying into the smaller companies need to. There really is a shortage of new exploration projects being developed to go into production. There's going to be such a massive squeeze on metals coming up fairly soon. Okay, that's pretty enough, Paul. We'll call it a day there, and we'll speak again tomorrow.
Very good. See you then.